Hi, welcome to This Week in Oil from FMXConnect.com. It's Thursday, June 10th, Aaron Altieri reporting. Oil got off to a rough start this week, dropping as low as $69.51 a barrel in the wake of Friday's equity sell-off. Contagion in Europe remains at the forefront for risk managers. Hungary downplayed the report of financial apocalypse, but admitted it was playing politics with its balance sheet. Great Britain Prime Minister David Cameron's somber budget cuts announcements, Spanish government workers going on strike, and Sarkozy and Merkel canceling their meeting on Monday did not help matters. Nevertheless, oil has been going strong since, hitting a high note on Wednesday's inventory report. But investors remain cautious that a weak euro and stock slide could wipe away the gains from a second straight week of diminished supply. Speaking at the same time, and almost an aside, Federal Reserve Chairman Ben Bernanke cautioned on the need for debt reduction, the lack of which could easily dwarf the modest growth reported in May's Beige Book. In price action for the week, crude oil is up $4.79 or 6.3% at $75.12 per barrel at 12:47 p.m. Futures have been trading higher every day this week thus far. On a week-to-week basis, crude volatility has picked up somewhat but remains more pronounced on an intraday basis. According to energy analyst Peter Buttel, president of Cameron Hanover, this week marked the first case of back-to-back crude oil stock draws in a row since January. And that suggested to traders that recent burdensome inventories may start to diminish. Technically, the overall market remains bearish with the potential for further sell-offs. FMX Technicals suggest that a close above $75.80 may push the price to test $80. If this fails, expect to see further downside pressure to test $69.51. The Energy Information Administration released its revamped petroleum report yesterday. Crude oil supply dropped 1.8 million barrels to a total of 361.4 million barrels. Distillate fuels increased by 1.8 million barrels to 154.8 million barrels. Gasoline was flat at 219 million barrels, while refinery use increased 1.6% to 89.1%. Natural gas storage rose by 99 billion cubic feet to a total of 2,456 billion cubic feet. Since cutting the riser on the leaking well last week, BP is capturing 15,000 barrels a day and has announced that the collection rate should continue to rise. This is great, but just how much oil is actually coming out? When BP is capturing more oil than most of its prior estimates combined, and every news channel is still featuring escaping oil on the live feed, the answer is much more than originally thought. BP is coming under increased scrutiny in every aspect of its cleanup operation, and the government may take over the claim process shortly. Peter Buttel talks about the spill's effect on the offshore drilling industry in today's Fuel for Thought. Quote, residents of the U.S. Gulf Coast are eager for the Obama administration to establish clear-cut rules for offshore drilling, which provides jobs and livelihoods for many in the region. The administration has promised to do just that. This catastrophe will not be the end of the offshore drilling, but it certainly will redefine it for years to come. It is one thing for people to want rules for a business that has provided jobs and incomes in the past, but where this bill is going to be most insidious is in areas where it might have made a difference but has not yet established a toehold. Any new areas are likely to be kept out of circulation and are unlikely to be allowed to start drilling under the new regimen. Offshore drilling may return to normal in some places, but it will never be allowed to be normal in many others, making this an amazing corporate mistake affecting an entire industry." End quote. The Census Bureau is releasing its report on May retail sales tomorrow, and everyone is waiting to see what it will say about the strength of the economy. Rumors that BP could go bankrupt are gaining some momentum, fueled by uncertainty of the final cost of the cleanup and a recent run-up in the cost of the credit default swap. Once again, we would advocate caution over the week ahead. Markets remain very skittish, and technical traders are wading in for the wings to punish the reckless. Smart money remains largely in reserve, waiting for opportunities to pick off the weak and undisciplined. You can look for more energy market news and updates, including overnight and options report at fmxconnect.com. I'm Aaron Altieri. Thank you for watching.